Julius Buchanan, editor-in-chief at Wealth Solutions Report. What's the latest on a major story you've been working on?
Great to see you, Chris, and thanks for having me back. Um, yeah, so one of the large trends that we're working on right now, and this is multiple stories. It's something I mentioned at the Jolt conference back in June that we're following. It's private markets. Private markets has been, as you know, increasing quite a lot. Much more than even than we had anticipated in the middle of last year. We're seeing quite rapid growth in that area in products and in all kinds of secondary items that go towards making the private markets investments work. We're seeing that for several reasons. One of those is that there's more private equity, private credit, and VC is becoming available through what some are calling democratization. I don't think it's a perfect analogy, but making private markets more available to people with lower asset levels. So where they were once the domain of institutional investors, then went to ultra high net worth, and now they're making their way down to mass affluent. And there's even ETFs and that's a kind of a quandary in itself, how you have private markets instruments packaged with an ETF because that's a publicly traded instrument. Um, but I think what we're seeing here, one of the things is we're seeing alts, the old alternative investments category, has kind of been repackaged in a way. It's not a total one for one, but it is close. So you see much overlap between private markets and what are considered alternatives. We're seeing with that overlap, we're also seeing technology improve. We're seeing reporting, much better reporting capabilities, which gives more data. We're seeing technology also improve the ability for people to subscribe. It used to be a stack of papers and a lot of stickies with sign here. Now it's actually pretty easy for people to subscribe it, at different levels. Not all of these are ETFs, of course. There's plenty that are available through financial advisors only. But we're seeing that kind of technology. We're also seeing lower minimums, and we're seeing tax reporting actually. Some firms are looking at and have changed to structures that are 1099 reporting rather than partnership reporting, which is more complicated, and that's more important. The smaller you go into lower asset levels, like high net worth and mass affluent, where they pay more attention to the time that their tax preparers are actually spending. And 1099s are just easier and more understandable than the complicated partnership reporting. So we're seeing things like that, and while we're covering this in news and frequently, especially in our investments roundups, we're also covering it in various thought leadership pieces. And this month we had a webinar at the top of the month. Our CEO was with the CEO of Stepstone, who is a manufacturer of these of private markets investments. And so we're covering it in various articles and plan to continue to do that as this grows. One of the things that we've seen from the various thought leaders is that they don't think that necessarily people should just go and buy this without knowing what's going on. They do advocate, manufacturers and CIOs are advocating for people to understand what kind of illiquidity risks are there, what the product has for illiquidity. They emphasize due diligence to make sure that you're in a good product. They're also looking at things like education. So people really need to know what they're buying. Also, there was an interesting comment by one of the heads of Cerity Partners Family Office, and they serve ultra high net worth, but what he said was it doesn't necessarily mean that the ultra high net worth, because they have access, therefore they should just have portfolios filled with these products. You have to look at what it does. And you said, for instance, look at how they perform against the S&P 500, and often the S&P will beat them. So what are you looking for? What are you looking for? What kind of diversification are you looking for in these products? And that's something that advisors really have to pay attention to is, what are you trying to accomplish when you put this in a portfolio. It's not just returns, it's something else. It's diversification. Um, what are you looking to achieve? Are you're looking at lower risk? One of the things also that we heard recently was that it is a way to diversify into equities that are not available because the trend over the past couple decades with various financial crises has been that the SEC has tightened its public companies reporting and the obligations that go on public companies, publicly listed companies. Therefore, we have over time have many less, I think thousands less publicly listed companies in the U.S. So, in order for people to gain access to companies that aren't publicly listed, this is one way to do that. It's an effective way to get out there and gain that access. And there's different levels, private equity versus venture capital. But we see a lot of things happening in this space, and we're going to continue to cover it. We don't see this as just a passing trend. We see this as something that is going to continue to gather steam and get larger as time passes. So we're going to keep looking at that both from the news angle and the thought leadership angle.
Thank you. It's a very interesting topic because one of the major refrains is that the financial services space has opportunities for institutional investors that retail investors simply lack access to. And so here we have potential innovations that can possibly close that gap, and yet it brings its own set of risks and uncertainty for the retail space, which raises questions for the financial advisors and their firms about what is suitable to whom and easily even worth it for the advisors and their firms from a business perspective. Julius, thank you very much.
Thank you, Chris.